The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Good morning, everybody. Tommy O'Brien with Tom O'Brien. We got the Dow negative 30 points, trading at 24,756. S&P's positive by 1 point, trading at 2708. And NASDAQ negative by 6 points as well, trading at 7274. Good morning, Tom. So we got a little negative action after markets coming into the open on positive territory.
A little negative action, and you know, there's the disconnect here. Looking at this market is that we had Goldman come out with great numbers, sold it off. J.P. Morgan sold it off. Morgan Stanley this morning, great numbers, opens up $1.50. And bottom line is that they're selling that off too. And it's like, you got to be kidding me, man. It's like, what is this all about? And I guess it's one of those things. I don't care what you did for me yesterday. What are you going to do for me today?
Thank goodness they're delivering record profits, because if they weren't, who knows what would happen to some of those banks, man. They talk about some big numbers and the market just not reacting as I'm sure they wanted.
No doubt. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. Now, every trading day right here, folks, 11 to 12 Eastern Standard Time, you want to understand defined risk, options upside down, futures upside down. Great program. Just go to TFNN.com, hit Tiger TV. You can also just go to YouTube, hit TFNN in the search bar. You're going to bring it up. Bottom line is that you want to understand strategies. Kevin and his team, they go through them each and every day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, kind of an odd-looking market we have here today. E-minis only up 1 point, and the NASDAQ down. Yeah, Tom, I reiterate what you were talking about. Morgan Stanley just annihilated their earnings report. I mean, those are big numbers they put up. IBM, though, just shows you if you miss it all, if you stumble, I mean, their earnings per share was a beat, but the numbers were kind of muted. And if you miss it all, they punish you.
They do, man. That's you know, we got IBM down $10 right now. You know, Kevin, what's amazing? Imagine, Kevin and Tommy, if we own one of these banks, right? And you come out with these extraordinary numbers, right?
Right.
And all of a sudden, the market says, well, I don't think I like them. It's like, what are you talking about, man?
It had to be dicey to be the Morgan Stanley crew, right? Where you watch what happens yesterday with Goldman, you say, man, we're going to crush it too. I hope they react in better fashion than they did with Goldman. And yeah, they're up $1, but I'm sure for record numbers across the board for Morgan Stanley, and they're barely positive in terms of, and then you look at like IBM, like you said, down 6% already, and we'll see where the day leads.
Yeah, and it's not like a stock like Morgan Stanley had run up that far. Right?
Right.
I mean, it's had, you know, some of these stocks have had good runs, make no mistake, but, you know, but Morgan has run up from the mid-40s, right, since last summer.
Yes.
It was on the 44, 45 level, so it's not a that, you know, I guess that's significant. It's probably 15, 16%, so, you know, but it must be, you know, the guidance going forward is such an important part of these earnings that if they're not hearing everything right, in terms of guidance and in terms of your numbers, you know, but at least, hey, Morgan Stanley's the only one holding in of all of them.
Yes.
After the earnings. So, but God, my gosh, Morgan Stanley put up some monster numbers in terms of trading.
Just fabulous, no doubt. Kevin, I want to switch gears for a second. You know, yesterday we got a couple nice calls about the option market, and we had a couple, you know, tigers out there. They got into Raytheon. They had Raytheon calls, and they did very well, but they're just stepping their foot inside the option market, right?
Sure.
You know, we explain it to them. You guys are on every day. What was intriguing, and I know you guys go through this, but as Tommy and I were going through it, it's pretty amazing that the amount of premium that gets put in these options many times. Right, they're coming out with earnings, I think, the 26th of April. And he had the May options, and they were 5 points out of the market. out of the money. But because Raytheon had gone up pretty nice, there were some good numbers. The real question is, when people are starting in the option market, we told him to start listening every day, and he does listen. What kind of advice can you give him?
Well, for the first thing, when just based on the information you gave me, it sounds like his stock has had a good run. It sounds like earnings are coming up pretty soon, and he's got next month's options.
Yes.
Right? So first thing I would say is be real careful about trading the earnings event. So he's probably getting some lift from the stock movement. He's probably getting some lift from implied volatility going up. So if that's the case, be real careful that you don't hold it through the event where that implied volatility will come out.
Yes.
Right? And you'll lose some money based on the implied volatility. So make sure, his timing should be, if you want to exit the trade now, it could go up further from there if they have good earnings, and he could still do well. But the first thing I do is be real careful about holding option premium through an earnings event. Right?
Yeah, no, that's what Tommy had said to him. Just because then you're just playing an option, you're playing an earnings play, right? That's what's going on there.
Exactly, and you know that implied volatility is going to go up into the event and then come out afterward. So be real careful about that. The timing is very critical.
Yeah, totally. Pretty cool, man. I'm telling you, when we talk about volatility, and we're looking at these, just the market in general, it was pretty interesting. Like Goldman, Goldman made so much money, Tommy, on the equity trading, right? Because of volatility. Right. Then it's like, okay, you have volatility, but we know volatility could be lower market. So it's like, which one do they want, right?
Goldman Sachs made $2.31 billion in equities, $2.07 billion in fixed income. Right?
Wow.
So revenues total $10.04 billion versus only $8.76 expected. Guys, so
I know.
In terms of expectations, they killed.
Quite a 90 days to
dividend,
crush it like
75 cents to 80 cents.
Yeah.
Right. And I guess the number's going to be here, for these banks, as we were on TD Network this morning, folks, and, Oliver Renner was talking about that, you had the bond market, bottom line, last quarter, was basically going down, yields are going up. But we haven't had much movement, since the beginning of February. So it's going to be intriguing to see, do they get more of a spread, Kevin? Do you know what I'm saying, going forward?
Sure. And we've discussed so many things on the bond market this morning already, Tom. We discussed the yield curve in the future show this morning. We're talking about, the Fed is coming up with all the different Fed moves that are coming from the different countries in the next few days. So we got a lot of news coming out. Bonds are obviously, we talk about long-term trading trends versus since that March 21st Fed meeting where they raised rates, bonds have actually been very strong. Throw a little geopolitical risk, and the bonds are, have been relatively strong here. That seems to be leaving a little bit now as we get into today, and bonds were a little softer this morning.
Folks, stay right here. 45 minutes from now, great program, understanding options, strategies, futures. Kevin, thanks so much. You have a great one, safe one. We look forward to show in 45 minutes.
Thanks for having me, guys.
Thanks, Kevin.
Thank you. Stay right there, folks. Tommy and I are coming right back. And silver has caught a big time, folks. Up 43 cents, 2.3%. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, everybody. We get the Dow negative 42 points, NASDAQ negative by 12, S&P's flat, and silver up 45 cents, Tom, as you were saying. Quite a day for silver. You got gold contract up $6.80, but silver rocking and rolling for sure.
Silver, man, this is like, you talk about a bid, folks. This is pretty intense. So if we take a look at silver, you get it up 2.3%. Wide price spread. We've done 108,000 contracts already. I mean, bottom line is that you launched the consolidation it's in, and that say silver was going to go to $18, man. And the swing high, which is the 25th of January, is $17.85. And the way I'm getting $18, you take the top of that consolidation, which is $17.02, the bottom, which is $16.10. You just add the buck, and bottom line, you know, we'll see how this shakes out, but it's performing. And in the gold contract, man, they just love messing with both of those commodities. Gold, you know, got to a price point of $13.59, has volume up there. Then they smashed it right down, man. They brought that thing right back down to $13.51. It takes off again. I do expect it's going to get higher. Well, it's going to be intriguing there by the end of the day. We'll see whether that smash down had to do with actually an operator actually looking to buy it, that it took off without him, do you know what I mean? Or her, bang, smash it down. I got to buy it lower. And, you know, we go from there, Tommy. We got EIA.
Yeah.
Oil. Look at this oil market, man. Pretty amazing.
So, speaking of commodities, right, we get oil Wednesday. So what time is it? It is 10:20 exactly. So we got 10 minutes until we get the EIA inventory report on oil. So jumping over to the Nadex platform, I have the oil contract up here, currently trading $67.69. Quite a number on oil, man. We climbed above $68 as of about the market open this morning. So right away, I jumped into the 11 a.m. spreads, okay? And so these expire at 11 a.m. And what we'll take a look at is potentially setting up, like we do, the bullish and bearish trades so that we can capitalize on potentially volatility in either direction as we come into this inventory report at 10:30. So quick glimpse, here's your 11 a.m.s. So right off the bat, 67.75 is going to be a price point that we can use for our bullish and our bearish spread, which is nice because we're trading literally right now at 67.75. So here would be our bullish spread, 67.75, up $1.50 to 69.25. Here could be our bearish spread, same thing except $1.50 downward, bearish from 67.75 to 66.25. You could buy the bullish spread, you could sell the bearish spread, and really all you're doing is you're looking for volatility, right, Tom? One way or the other.
Yes.
And both of them combined are going to cost you about $43. So that would represent 43 cents of movement you would need away from 67.75 in either direction before you start to break even. And again, these expire at 11 a.m., so you'd have about 30 minutes after that news breaks. So $43. Now let's jump around and just see what kind of other possibilities that you'd have on the platform. Now the noons line up with same exact price points, which is nice.
Okay.
So the only thing difference here is that you're going to be paying for an additional hour. Now what's nice is when we juxtapose the two contracts, here's your 11 a.m. and here's your noon. Now what's nice is you can see automatically the difference between the bid-offer spread. So you're going to pay an extra 4 pennies or $4 on the bullish side, and I'm guessing the bearish is almost going to be identical, and it is. So it's $4 extra on each side, so it's going to be about $8 extra total, and we'll just set it up the same way. You'd be buying the bullish spread, costing you about $25, selling the bearish spread, again, costing you about $25, $26. And the reason why they're identical is because you're right at the point where this would be the ceiling and the bearish spread, the floor and the bullish spread. So that one's costing you about $50 or $51. So what you can see is that, you know, here's the setup initially, right? You could pay $43 for the 11 a.m. You could pay $51 for the noon. Is that worth it to you? What do you think is going to happen between 11 a.m. and 12? Are you know, do you want that type of time exposure? Are you willing to pay for that?
And 8 cents is not much in this market, man.
It might not be, right? Oil's been rocking and rolling. It has, depending on the move. It is nice that we're now 7 minutes away from when the EIA numbers drop. And let's just take a quick glimpse. I'm not sure. Let's see where the 230s line up. So the 230s, I'm just jumping around. So the 230s could line up. It's going to be a little bit of a different price, okay? But if you wanted action and exposure all the way until 230, you'd have 67.50 would be your price point.
Okay.
Now, the slight difference here is you're going to have intrinsic value on the bullish side, right? So you're going to be paying a little bit more for the bullish side because along with the premium, you're going to be paying for actual intrinsic value. So here would be your bullish spread, 67.50. Now, these are also $3 as opposed to $1.50. So you'd have 67.50, and you can see that automatically just this one side of the trade is going to be $44. And then on this negative side, it's about 25 cents out of the money, so you're going to be paying premium. So that's going to be about $64. Now, that has a little bit of a bullish bias, though, right? Because if you want to break even, yes, you do need to make up that 64 cents, but that 64 cents or $64, but 64 cents in movement needs to occur from 67.50, and you have a head start to the bullish side. So if you wanted to break even on the bearish trade, you'd need to get down there at about 63.85, versus on the bullish side, you know, you only need the market to appreciate a good 40 cents or so forth to make that up. So it is kind of nice from our perspective when we're looking for a straight volatility trade. We have kind of no market bias up or down. We're just looking for volatility when the underlying index, this being crude oil, happens to line up right where the floor and the ceiling line up on these two spreads. Because what makes that so nice is you're paying no intrinsic value. And that's what makes the trade more affordable if you're just looking for volatility. So we got about 5 minutes until the news comes. Oil has been quite a market to the upside. We'll see where those numbers come in, and we'll see how the market reacts. But not bad trade when you look at the action we've been getting. And I would like the noon maybe, and we always talk about, you know, if you're really looking for action, if you follow this market, there's a lot of action that occurs between 11 a.m. and noon after these numbers come out, and it's not always the first move that carries throughout the day once those inventory numbers are released.
There's no doubt. And, you know, it's intriguing. I mean, you know, we had the break top side in the oil market. The break I'm talking about, the consolidation once it got over 66. And, you know, now we're, you know, you're talking about 67.75. We're, you know, that's $1.75 over that number. So, you know, I'd basically been looking at that, you know, on a longer term basis, oil wants to go higher. So we'll see where this volatility goes as we come in. And, you know, when we look at the dollar once again can't handle price. The dollar tried to get higher today, failed. Now it's down 23 ticks. We stop putting those together. It's like, you know what? Is oil going higher because we're using so much of it and there's less supply? Or is it a combination of that plus the dollar is basically getting smoked?
And you're letting your market biases slip in there. A dollar can't handle higher price. That's your bias. That's everyone's bias. You know, whatever we see, we'll see where the market shakes out in terms of what happens at 10:30 a.m. But that's the best part of this. You get to decide, right? You get to decide.
Right.
And like we always talk about, we highlight the 2 trades you can take. But if you're just straight bullish or bearish, you could just take one side of this trade. And what is nice, you know, in terms of the noons, we're looking at both sides of this trade in terms of combining them so you have exposure to the upside or downside. But either of these trades you could purchase for about 25 cents or $25. And then, you know, from 67.75, you just needed to go in your direction 25 cents and you're at break even.
No, I love the volatility trades. That's the bottom line. You know, I'm just basically giving it a longer aspect.
Definitely.
Stay right there, folks. Tommy and I are coming right back. We have the Dow right now down 29. Nasdaq's up 5. S&Ps are up 2. Coming right back with oil numbers.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, everybody. Tommy O'Brien with Tom O'Brien. So it is 10:30. We're getting those numbers. I'm seeing them come across the screen right now. So crude oil inventories falling 1.07 million barrels, the EIA says. Gas inventories falling almost 3 million barrels. And to check back to the Nadex platform, check in on the market. So we got a spike higher initially, and it seems like that's carrying. So again, we were trading at 67.75 prior to that number coming in. Currently trading about, I can't even keep up, 68.10, call it. And So to kind of recount, if we had traded the noons, those are going to cost us about $50, $51. So you would need 51 cents away from 67.75. So just call it 68.25 to the upside would be the area that you began to break even. And
Okay.
we're about 8-9 pennies from that region right now with the market climbing up. And before I finish, there we are. Okay, so here's our bullish contract. This is going to be the one with all the value since the market's rising. And you can see that as we're here, this market now is going to put us in a profitable position if you were to sell. There's your max profit, as in you'd close out that one contract, recoup your investment, or you just let it go. I mean, we're a minute and a half into the news, right, Tom? And
Sure.
these contracts would have 90 minutes after 10:30. But like we always talk about, depends where your market bias is, right? If you see very limited potential to the upside, maybe that's where you decide to at least recoup your investment and keep your negative spread open for hoping a pullback throughout the next 90 minutes, or maybe you decide to let it run. There's a number of ways you can manage that over the 90 minutes until expiration.
And you know what's interesting, Tom, is that this here today was very close to the API last night. So it's interesting, that those numbers, a lot of times they're not even close, but yet the market basically still wants higher price,
Yes.
Yeah, so
Oil is not stopping, man. Not stopping.
no, it's not, man.
And as we speak, it's creeping higher, 68.28. So we'll check back in throughout the half hour. But hey, anytime you get enough action within the first 2 minutes to break even on the trade, that's a good indication in terms of that trade, just right off the bat. But like we see, that doesn't mean it's going to hold there. We've seen that pull back within the next 2 minutes and be right back to where it was. So we'll check back in, see how the market reacts throughout the hour.
Yeah. So we'll go over and take a look at the dollar index right now. So,
You know what? I'm sorry. Can you stay on that chart you were at? So I just saw the median estimate, which was nice there. We'll finish up that segment real quick. So the median estimate was an increase of 650,000 barrels. There we go. And so we had a decline of 1 million barrels, and that's kind of the big headline number. So that would be, less supply, right? Supply equals demand is where the price equals. So less supply than they were thinking. The estimate was a rise, and we have less crude oil. So I just want to highlight that. That puts it.
And look at that gasoline, Tommy. They're expecting a 450,000 plus.
Yes.
And we get a 2.9
million barrel. Yep. Draw.
Right?
Yes.
Draw.
Yep.
And guess what? Folks, it's April 18th. Okay,
Yeah.
May 30th, driving season is right upon us here.
And look at that distillate, same thing. The estimate was about even, minus of almost 400,000 barrels, and it came in at 3.1 to the downside.
And you know what? They're going to be using more gas and heating oil up in the Northeast because they're between New York and Boston. My understanding is that they're going to be getting more snow in the next
because
couple
the
days.
winter just refuses to end up there, is what I hear. I know.
Seriously.
Yeah. So, just right back to the contract one more time before we jump. Spiked up to now 68.42 was the high, sitting there at about
that's a good trade, man.
68.27. So we'll see where it shakes out. Okay, moving on.
You gotta love it, man.
Totally.
So let's go into the dollar index. We take a look at the dollar index. So simultaneously, what we have out here is that you have the commodity complex moving, and dollar index this morning, got up to 89,500. Couldn't handle it. We get 15,000 contracts. It's like, okay, each and every time it tries to get higher. Now, just since the last high on the 6th of April, you can see all these lower highs.
Yes.
That's setting up, this thing wants to go after its swing low of February 16th. And, the rest of the commodity complex. Let's look at the whole complex, actually.
And as you just jump into it, it's amusing. I happen to have the front page of CNBC up on one of these screens that's just up, and headlines are ripping across that oil topped $68 for the first time in more than 3 years as the stockpiles fall. So it's just interesting. Those headlines are going to be everywhere, of course.
They are.
Yeah.
They are. And now it's, so we'll go back. Let me go back to oil for a second, because I want to show you, everyone, something here. This is what the scary part about where oil could actually go now, because we came down so fast in 2014. And, it took a long time to basically, we had this consolidation that you could say started in December of 2014. We go over, we broke topside, in January of this year. It kept going sideways, not doing much for 3 months, right? And when we look at the other side of the chart, it's like we went so fast down from 107
Yes.
to 43. It's like, hey, guess what? You know, there's not much in between here. Now, what is in between here, I would say, is just the lows of 2011 and 2012.
Yes.
But you can see it's not going to be tough.
And that's at least up to 81, though, is where those,
It
or
is.
80, where those lows start coming in, which is $13. And even, you know, just looking at that chart you have up, it is quite dramatic. And even going back, the decline from 2008, and that's a whole different story. But what I was going to say is that, so you went from that 110 in 2014 down to, like, you know, 46, 47, wherever it is. But then you only had 3 or 4 months that we got a little blip upside, and then that's where it just continued right down to like $27, right?
Isn't that amazing, thinking about $7 oil, folks?
It's even more amazing thinking about over the fact of like a year it went from 107 to 27.
Seriously.
Yeah.
That's heavy destruction. And now we hear about the aspect of how much oil we're pumping out.
Yes.
The bottom line is that
U.S. is quite
I guess
a producer.
we're using just as much.
I guess so. I guess so. Totally.
Yeah. So let's go take a look. Oh, let's go over to IBM for a second. So, Big Blue came out with their numbers.
Yeah.
Bottom line,
They continue to
market-wise,
struggle.
Oh, that's taking a hit, man.
The headlines I heard just about the numbers in terms of themselves were shrinking profit margins, which is never good, and declining revenue. And that's the big problem for IBM is they've had revenue shrinking for like 5 years going on.
Huge.
Yeah.
And they're still running a decent margin, but guess what? For a tech company, I think they went from like 47 to 44 or something.
Okay.
That's not good for tech companies.
Sure.
I mean, these tech companies, they run margins that are much higher than that.
Yes.
Yeah.
Yeah.
Inside the NDX out here this morning, now this is kind of intriguing. It's the chip companies that are getting smoked. You have Lam Research down 5.5%. Applied Material, which makes the equipment for the chip companies, that's down 5%. You got ASML down 4%, and CLAC is down 2.7%.
Yeah.
So that's the culprit there.
And then how about CSX? They came out with their earnings as well. Looks like the railroads are doing well, man.
It is. That's up 5.6%. Intuitive Surgical up 5%. Tesla's up 3.4%, and Shire is up 3%.
Good old Tesla.
Yeah, I know. I know. But seriously, man. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We have the Dow Industrials right now down 21. Nasdaq's up 4. S&Ps are up 5. Coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tom and Tommy O'Brien. You get the Dow kind of hanging there at minus 28 points. NASDAQ positive by 6. S&P's positive by about 5. Market kind of tame for most of this hour so far, Tom, as not quite where we were pre-market with things in positive territory. Dow was up, I think, about 80 points. S&P's positive by about 9-10 points. But kind of just hanging around even territory so far.
And look at this Morgan Stanley. They sold it off.
Oh,
These
boy.
banks, folks, you know, you went from $55, you're at $53.89. You know, bottom line, this is intense, man. I mean, you know, I don't have no, you know, great love for the banks, but it blows my mind just as, you know, as we run a company that you get earnings that are a mind blower, right? And
Definitely.
they sell you off.
I mean, record-breaking profits, revenues, trading across the board, and the market says we want more.
Yes,
Seriously.
Exactly. And you know what? We do want more. I want to know what's going on with our man, Mr. Larry Pesavento and
That's
Jim
right,
Bartolome.
man. So, 6 days from right now, a week from yesterday, next Tuesday, this coming Tuesday, we'll call it, Larry's going to be in there with his friend, trader Jim Bartolone, and they are going to be doing a workshop, taking the ABCD pattern to the next level. That is Tuesday night, this coming Tuesday, 6 p.m. They'll be in there for an hour and a half, 90 minutes, 6 till 7:30. This will be archived if you cannot attend live. And all subscribers to Larry's daily newsletter, Fibonacci 24/7, gain access. I encourage people to go over there, check it out. If you're new, you get a 30-day money-back guarantee. He kind of talks about what they're going to be talking about within that 90-minute workshop. Larry's had Bart on the program with him many times as a guest, and they've put together a great workshop, and I look forward to it. I'll be here in the office watching that for sure, a good 90-minute webinar, and Larry has an outstanding service either way, folks. I encourage you to check it out, Fibonacci 24/7. He puts a weekly report together every Sunday evening, kind of encompasses the full week, about 10, 15, 20 charts in that one report, along with a couple pages of commentary. And then throughout the week, he's sending charts, videos, 24 hours a day, 7 days a week. You want a video Saturday at 3 in the morning? You may get one, because that's when Larry may be looking at the market, drawing those ABCD patterns, whether it's, 4 in the morning and Tuesday. You know he loves to trade at all hours, and so that's why he named it 24/7. So get over there, check it out. You can gain access to the weekly report that he just put out on Monday morning if you sign up right now, and of course you'll get all the charts ahead of that. So check it out Tuesday evening, April 24th, 6 p.m.
It's going to be a great workshop.
Oh, I'm excited, totally. Larry always does a good workshop, and he always brings in some bright minds to do them with them, which is awesome.
Seriously.
Yeah.
Hey, I heard we did the news update. Amazon and Best Buy.
How about that one, right?
Yeah. What are they doing actually?
So here it is. I got the news story up right here. We'll cover it. So what it is that it's Amazon TVs. It's not just HD TVs.
Oh.
Yeah, it's their TVs. It's their new Fire TV Edition smart TVs. So Best Buy, excuse me, will become the exclusive retailer of those TVs, and they're expected to be rolled out this summer. And
I think I need one.
Yeah, we all need one, right? You know what's amusing is I just got billed for my Amazon Prime last night. And I said, that snuck up, man. Once a year they hit you, but it's always worth it for how much they provide in terms of their the programming.
Yeah.
The 2-day shipping. I'm pretty sure I get my value out of that. So the deal will allow Best Buy to tap into Amazon's vast customer network, marketing Amazon's technology to a wider array of shoppers. And then it's an interesting quote from Bezos they have in here in terms of giving some props to Best Buy. I've watched Best Buy for a long time. In the last 5 years, since Hubert, and I guess that's probably their CEO, Hubert Jolly, came to Best Buy, have been remarkable. I mean, the turnaround that got done there from just a business case study point of view is going to be written about and talked about for a long time. And he probably has a good point. I mean,
he does.
If you were in that Amazon room, you'd almost written Best Buy off, right? They were crushing them. But Best Buy, smartly so, they said, listen, we gotta start matching prices, number one, because nobody's buying a $1,000 TV sight unseen, as in you walk into the store, you just buy it without price shopping. And they realized they were becoming, basically the eye candy store for Amazon, and they changed their business model, and they've flourished since. And so Amazon...
Listen, I did it personally. You
I did it as well.
Too.
Yeah.
And you know what, folks? I mean, it's just cut and dry. Went into Best Buy, had already been on Amazon, already knew what kind of a TV I wanted, saw it up on the wall, turned around, I just said to the sales guy, I says, well, listen, just pull it up on Amazon. There wasn't a flinch in his voice. No problem, pull up, that's the price. Great, let me have 2 of them. I'm out of here.
Yeah, so they said, Best Buy said this summer it's going to launch more than 10 4K and HD Fire TV Edition models, and they're going to be from Toshiba and Insignia, and that they're going to be sold in Best Buy stores, online, and for the first time, Best Buy will be a third-party seller on Amazon.
That's interesting.
It is.
So those Insignias, they're going to be inexpensive TVs because they're in there now, and they're not expensive TVs.
Okay.
TV, man, it seems like these TVs last forever anyway, so it's not like it's like,
no, I mean, they do last forever. The only thing putting them out to pasture is just the technology is flying so fast, whether it's, do you now have a smart TV? Do you have a 4K TV? That's more the acceleration I see. So Best Buy up almost 3.5% on that news. That would make sense. And Amazon... up almost a full percent, 15.15 for Amazon.
It would be amazing. We're going to have to watch that whole deal because I could see Amazon taking Best Buy out too. That's
interesting,
isn't it? I mean, you got
what is the market cap? What's the market cap? Can you pull up Best Buy? I mean, they're quite a juggernaut.
So
BB. Oh no, that's B.
Yeah, BBY.
Yes, that's what I was saying. Yeah. I was thinking I was saying Bed Bath & Beyond for a second, but no.
Okay, so $21 billion.
Okay. Yeah. I was just curious.
Yeah, no. Let's see what how they've been doing here. So, okay, so they're staying flat, but that's positive for basically a retailer.
And
right?
look at their earnings over that time that their revenue stayed flat.
Oh yeah.
And that's where
look
probably
what
closing.
Tommy's talking about, folks. They did $42 billion in 2014. $42 billion 2018. The difference is 2014 made 207, 2018 442. So they had legacy costs in 2014 as they straighten themselves out.
They closed a lot of stores too, so they're doing the same amount of revenue with less stores.
Right.
I mean, right off the bat, that's less expenses for sure. Yeah.
Yeah, and listen, they domestically, it's only 2.3% of a 3-year segment, but they're growing.
Hey,
that's
to be growing in the U.S. as a company that's a retailer that
huge,
almost went out of business from Amazon is pretty.
Right.
Yeah.
Right.
Definitely.
That's exciting, man.
Yeah, and Amazon we'll see what happens, but it is intriguing. Amazon went the route of teaming up with them. Especially when you look at, Amazon has their Whole Foods. They have some retail space, but you can see that they're not quite comfortable with starting to sell their everything in Whole Foods, as in they're not going to be pumping 4K TVs next to the grocery aisle just yet.
Bezos is... Man, he's so far out. He's probably looking at a bunch of other companies saying, no, we're going to have all these guys. We'll start as partnerships.
Sure.
We'll take care of them. Everyone's going to make money. But we get
until we take them all
that's
over.
Extraordinary.
Totally. Yeah.
Stay right there, folks. Tommy and I are coming right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. We get the Dow negative 13 points, S&P is positive by 7, NASDAQ positive by 11. Excuse me. So, Tom, let's check back in on oil one time. It is 10:55 currently. So we've had almost a half hour since the news, and pretty interesting. Like we talk about occasionally, the first move is not always the move that carries. Quite a pullback here, 67.89 currently. We're only about 13 pennies away from where we were when the news, prior to the news breaking. We're trading at 67.75, if you recall. Currently trading 67.89. So that's why when we talk about potentially, depending on your market bias, though, you could always trade out of that position. If you get a nice pop immediately and allow for, and this is what we talked about, you could have closed out your bullish spread for basically a break even on both sides if you wanted to, and then this bearish spread would have been the one that remained active until 12 o'clock. And, you know, as we look at this market, we're now down 67.78. We're pretty close to approaching value in this bearish spread, and you still have an hour and 5 minutes that would remain active. Pretty
amazing,
intriguing,
right?
And as we speak, we're going lower, 67.69. You know, pretty intriguing for sure.
It is. Yeah. There's no doubt.
Always an exciting day in oil recently when we get those numbers, man.
Oh, it's huge. Then, of course, tomorrow morning we're going to get the gas numbers.
Yes.
And, you know, the way that this weather, you know, Andy Heck last night was saying to me that this is the first time in a long time that, you know, you're in April and normally they're putting gas in and they're still withdrawing gas, you know, because...
So for the stockpiles, usually the stockpiles are starting to decrease, increase, but no, they're still decreasing because of some of that wacky weather, man. Whew.
Wacky weather. Thank God we're not in that wacky weather. Come on down to Florida, folks. It's beautiful out.
That's right. You tell.
Folks, stay right there. We get swim lessons coming up next. Then we get man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Tommy, thanks so much.
Thanks,
have a great one. Have a safe one.
You too.